We haven't seen that so far in the data. If you look at the filing season statistics so far, we're pretty much on pace with last year's tax year. The question, of course, will be what happens with all of the returns that people submit last minute before midnight tonight. Several million of those are likely to be sent in via mail with paper checks. So we really won't get the final answer on what the tax season looks like for a while yet. I don't anticipate, though, a huge sudden drop. I think the question of IRS hiring, IRS firing is a bit of a medium-term question as to what happens going forward with taxpayer service, with guidance, with enforcement, not this year, but in years to come.
Talked to the Deputy Treasury Secretary on Friday on Bloomberg TV, Erica, who pointed to the receipts, the actual facts here. Gross U.S. budget receipts for the fiscal year up 3%. This is through March to $2.26 trillion, according to the Treasury. Michael Falkander says that's a robust tax filing season. Could that, in fact, be the story?
It very well could be. And if we look at the tax gap over time and we look at how the US compares to other countries, we're not like a major outlier. Most people pay their taxes, most people pay them on time. Our tax gap averages about 15%. That's the difference between what the IRS estimates should be paid and what ultimately is paid after audits and follow-ups. And that's tended to be pretty steady. So I don't think we'll see, sudden overnight huge drops, but it may be something that plays out over time. Probably not this year, though.
Well, and this year, of course, we are facing down a kind of clock here with the debt ceiling that still needs to be raised by Congress. The Congressional Budget Office, Erica, obviously has suggested they think the X date will come sometime in August or September. But just how easily could that be moved up, knowing there's only so far the Treasury's extraordinary measures are able to go?
Yeah, that could be subject to change, especially as we see timing delays with tax payments related to natural disasters. So several states have extended periods for when they actually have to pay taxes, and some of those go out past that estimated X date into November. So you could see timing issues there where it's not that the taxes aren't being paid, it's just they're delayed because we also have this natural disaster tax relief that we provide through the tax code. So that could be one factor to watch and see how that could potentially move up the X date.
We've talked a lot about a wealth tax, Erica York, over the years. Now we've apparently narrowed this down to a millionaire's tax. Is being discussed by Republicans on Capitol Hill and the White House. Our political team reporting that Donald Trump is actively considering these ideas. The House proposal specifically would set the new rate at 40% for taxpayers earning $1 million or more a year. What kind of impact would that have?
So that wouldn't be a huge tax increase relative to where that tax rate is scheduled to go. Recall that after the end of this year, the top tax rate is scheduled to rise already from 37% to 39.6%. So going to 40% isn't a massive change from there. What it is a massive change from, though, is the way we typically hear Republican lawmakers talk about tax cuts, which is lowering those top marginal rates so we boost incentives to invest and to work in the economy. Much better ways to raise revenue exist than raising marginal tax rates on work and investment. Things like broadening the tax base, clamping down on itemized deductions, looking at types of income that just aren't subject to tax at all would be much more fruitful than something like raising the top rate even higher.
Okay, so if this is really just a marginal potential increase in the top rate, how far would it realistically go to offset other initiatives we understand Republicans are pursuing, like, for example, raising the cap on the SALT deduction or no tax on tips or overtime, programs that we understand could add materially to the total cost of this bill?
So it really depends how they design those other types of tax cuts. The full proposals that Trump campaigned on would add, $2 to $3 trillion to that cost when we look at no tax on Social Security, no tax on tips, no tax on overtime. Depending how lawmakers design those, though, they could tailor them. They could put income limitations, they could put total limitations on the amount of the tax benefit available and really narrow down the cost. So then you wouldn't have to look too hard to find an offset. And really, that's the kind of stuff I wish we would be seeing from Congress already. But so far, we're close to 100 days into this administration, into this Congress. We've really seen the debate center around procedure and politics and not even delve into policy yet. So those are questions Congress needs to answer and needs to answer quickly, because the deadlines are coming for decisions on what to do on the tax bill, decisions on what to do as far as the debt ceiling goes, and all of that is wrapped up into one legislative vehicle right now.
Talk to us about enforcement, Erica. A big part of the narrative today, whether it's true or not, is that tax cheaters will have an easier time, and maybe some tax payers will become cheaters because it's getting easier to pull a fast one on the agency. Is that real or not?
Potentially, we don't really know. I would say one of the best ways to raise tax revenue is to raise the revenue that should be paid right now. So rather than lifting rates, rather than creating new types of taxes, making sure that people pay the taxes that is due is a really good way to raise revenue. We don't really know how this firing at the IRS, this workforce reduction, is going to play out. But I would say one of the things that it threatens is what you just said. People lose faith in the system. People distrust that their neighbors are paying their taxes, so why should I pay mine? That's not the type of vibe we want to create around taxes. We want trust in the system. We want transparency in the system. And really large workforce reductions without complementary simplifications to the tax system don't go in the right direction. You shouldn't significantly reduce the IRS workforce if you're still maintaining a really complicated tax code that has all different kinds of programs run through it. The first step should be dramatically simplify the tax system so there are less opportunities for abuse, and then you can shrink the workforce along with that simplification in the tax code.
And finally, Erica, what factor will tariffs ultimately play in the overall revenue picture, knowing that while the higher reciprocal rates are paused for 90 days, there is that 10% global baseline, 145% now effectively on Chinese imports, autos, steel, and aluminum. What's the net effect of all of that?
Right now, we've estimated that it will raise somewhere in the ballpark of $150 billion to $170 billion this year in 2025. That is highly uncertain. It's uncertain because the tariffs are really on again, off again. You only get revenue if they're on. If they go off again, you don't get that revenue. They're also subject to other types of uncertainty, like if Congress decides to challenge the president's authority, if those authorities get challenged in court. And are struck down. That could be another reason that revenue goes away. But ultimately, even with all of the tariffs that the Trump administration has outlined so far, it doesn't come close to paying for even extension of the Tax Cuts and Jobs Act, not to mention all of the other tax cuts they want to add on top. So right now, falls short of paying for tax reform, is highly uncertain, and is very economically harmful. So isn't even a good way to try to offset the cost of tax cuts, because you're probably harming the economy more with a trade war than you're helping it with the tax bill Congress is considering.